All right, let's take a look at DocuSign today, and I just want to give you some evaluations as far as the technicals go, because people are wondering, hey, when should I get back into the stock? It has fallen quite a bit. Now, keep in mind, a lot of the things here that I talk about, they're not recommendations to buy, sell, or trade any stocks. Everybody has a different risk level, and they have a different time horizon for their trades or investments. So as we take a look at DocuSign here, what I want to do is just overall evaluate what happened here. And when you look at what happened, we had a big drawdown from earnings and, you know, the news, and doesn't matter what the reason is. The point being here is we had a big, large drawdown with a lot of sellers coming in, and it broke some key critical levels. So as you look at this level, we're kind of moving sideways from about 180 to about 300. So it's just moving at support around that 180 price level, and then you had this big drop. Now, typically after large drops like this, I will refer to you for, let's just take a look at Netflix real quick. As you look here at the daily, I'm going to back it up, and you'll notice here we had another big drop. And then usually what stocks need to do is they need to consolidate for, I'd say, 6 to 12 weeks. So we consolidated sideways here. We even pulled back a bit more. And then after this consolidation, so here it is. So here we got 4 weeks, maybe 5, then you got 6, 7, 8. And then the stock finally started to kind of get out of that rut and trend. So anyways, that's kind of one example there that you could see that worked out here on Netflix. And then again, if you believe in the stock and the company, then that can kind of play in nicely. There's many others out there as well. So take a look at Etsy here, and we'll just back it up a little bit. So here we had a little bit of selling pressure, and then again, a big drop and drawdown. You can see again, sideways consolidation, sideways price action. So here we went about 1, 2, 3, 4, 5. Well, let's just measure it this way. We went 1.5 months. And then that stock started to kind of get back into its trend. So as we get into DOCU here, you might be wondering, okay, well, when is the time? So the point is right now there's not a lot of critical support level because the stock had a large movement upside. So there's a lot of weak hands at these price points and these price levels. So you could get some sideways action and a further drawdown, like maybe we talked about in Netflix, and then it could go higher. Or you could just get some sideways action from here if it's able to hold and then break to the upside. Now, obviously, it could just go sideways and then break and keep going, dropping down, trying to find some support levels. But I'm saying if you're trying to look for a buying opportunity, I'd wait for some consolidation and price action. You even have the chance that this could actually get back into this 185 level or so, reject it a bit and start going sideways again, just to test those levels and areas. But I would say just be a little more patient. If you were to kind of trade this, you could start nibbling things in. So let's say you're looking to build a position of about 100 shares. You could say, okay, well, I'll get 5 shares now. Let me give it a little bit more time, and maybe I'll get another 5 shares later. It goes up a little, get another 5 shares later. So at that point, you're up to 15 shares. And eventually, as you see it start to move, you could say, hey, I'll get in 60, 70 shares later on. But this way, it spreads your money across different time horizons at different points within the stock. It's not kind of like averaging down as the stock keeps heading down, because you're positioning it at different points in time. You're not just trying to save a position. Yes, you are averaging, but you're not trying to just save a position that's constantly tanking. Instead, you're trying to build a position around a certain price area because you don't know when the bottom is going to be. If you're doing it on the option side, what you could do is take a look at just selling cash secured puts. It's probably the simplest way. It's the most expensive way. So you could sell something around 110, and then you would get that stock around the $110 price point, which is far lower than where it is right now. So looking at it here, if you're already interested in the stock, it's already, another 19% lower than kind of where it is. And if you wanted to really offset that cost, you could actually even turn it into selling a vertical put against the stock. And that way now, if it gets down to about 110, you're still waiting, but you're making $54 as you wait for the stock to come to you. So that's kind of what you're really looking for, a couple of trading ideas there. But again, everybody's a little different, depends on your personal take. I think for the time being, the stock is just kind of a wait and see. You've got toppiness at around 300. It's really a problem. And now you've been cut in half. Some key support levels, you've got some serious support around 65, 70. Where is that? That level is going to be about 66, 60, 65. And this level here, we've got 67, 68. So those levels, are basically around that 65 level is a critical support level. You do have some other additional levels right around 92 to 100, so call it about $100 a share. But beyond that, there's nothing seriously significant because you could get down into the 100 level because there's a lot of weakness. Because that run up was so quick, there's not a lot of buyers allocated at different price positions and price points. So that's a little bit of the downside with the stock because it moves so quickly. Now there's not a lot of support at those price points. So anyways, that's what I want to share with you as far as the DocuSign goes. I'd say take a look at maybe waiting for when things base a little bit. It could take about 6 to 8 weeks. You're looking for some sideways price action usually, or even some pops and then pullbacks. And then on those pullbacks is kind of what you're watching for. And obviously keep an eye on the volume as this starts to increase and pick up speed, especially with some green bars, green ticks. That's always a positive sign. Yes, there is a gap here, so typically they do get filled. But you want to make sure you have some room and time for the stock to settle or digest this recent phenomena. So when you think about it, it's kind of like if you have a death in the family, you have to have some time to cope, or if your dog dies, you have to have some time to cope, and everybody takes a different amount of time. So in this case, what's happening is people are taking some time to be able to take some of the losses, take some of the profits, take some things off the table, because you'll have some people that got in it way at earlier parts, and here they say, hey, I'm going to take my profits. So you need that digestion to happen as people make decisions throughout this, couple of weeks. And it may take a little bit longer time frame because some of the hedge funds, they take longer to process this. And then you could say, hey, okay, well then what's going to happen with the stock? So at that point, that's when you can start making your decision. But for now, you just got some sideways action that may happen. But if you start seeing this start going lower and creating lower highs, that's definitely going to be a problem. And you could expect a move to probably about the $100 price level. Anyways, I hope that helps, gives you some insight and some things to take a look at. Thank you so much for joining me. Hope you enjoyed the rest of the week, and I will see you next time.